Welcome to Stock Therapy with Penny Queen. Today I'll be doing an interview with Comstock Inc. CEO Corrado de Gasperis, and we'll be talking specifically about the metals side of the business. So if you haven't already watched the intro interview, it was primarily on fuels. I suggest watching that first. It'll be linked below this one. But today it's going to be all about the fuels vertical with maybe a couple questions about business transactions thrown in. So I hope you enjoy it. All right, welcome back. Today, I would like to start off with Comstock Metals, and I'd just like you to give everybody an explainer and give us an idea of where things are right now.
Yeah, so Comstock Metals is our recycling business, and we chose to start recycling electrification products with the photovoltaics, the solar panels, if you will. And we are able to take all of these solar panels, these end-of-life solar panels that would otherwise be going into landfills and potentially polluting the ecosystem, and recycle and reuse 100% of the materials. That's remarkable because we're able to take 100% of the aluminum, 100% of the glass, and 100% of what we're calling silver-rich tailings, and literally have all of those materials go back into a manufacturing process. So either making new bottles, new cans, or silver, reusing the silver for a whole host of electrification reuses, including solar panels. So our facility got up and running at the beginning of this year, and we were able to prove the concept that we could cleanly take in the materials, recycle the materials for resale, and do that without polluting. So we don't have any meaningful or material emissions. We don't have any contaminants residual in what we're selling, which makes them fully qualified for reuse. And sort of the punctuation on that is we claim strongly that we're zero landfill solution.
All right. So can you talk a little bit about your proprietary process and how that impacts your efficiency and the environmental impact? I know you already touched on it a bit, but
yeah, for sure. So yeah, the most important part of the process, I would say there's two. One is the speed and the scale at which things can be done, and the other is the cleanliness, if you will, the effectiveness of eliminating any contaminants, any meaningful or material contaminants from the process. People want to buy clean glass, they want to buy clean aluminum, they want to buy materials that can be reused profitably, productively. And so the stickiest wicket, if you will, is these laminates, these plastics, and these glues that come with these electrification products, all of them, be it batteries or solar panels or otherwise. And so our process, which is thermally destructive, ensures that we're able to eliminate those laminates, plastic glues effectively, efficiently, in a very short cycle time process, and produce a very clean and good product on the outside of that. So there's a thermal process that we have that's the center, both physically and philosophically, technically. It's the center of our process, where we can cleanly eliminate those contaminants quickly, efficiently, and produce a very, very good product. The second phase of the know-how, and it really rests with our president, who is a 35+ year chemist who has spent his entire career building facilities globally to handle these types of hazardous materials. So the chemistry here is very important. I think some people, and this isn't meant to be disparaging, but they look at recycling, almost like a blue collar, waste handling business. This is a very chemistry, very material science particular business. If you expect customers, sophisticated customers, to buy these materials and put them into their products, right, it has to be the right, it has to be the right outcome. So the second aspect of it is our ability to scale, and we're in the process of finalizing the permit application for what we call industry scale. Industry scale for us means being able to process a panel every 7 seconds. Our initial capacity is anticipating 100,000 tons per year of production, which is consistent with a panel every 7 seconds, which translates to about 3.5 million panels a year. So 3.5 million panels a year. The panel's weight varies based on the design, based on the styles. The materials vary based on, the different types, but generally between 30, 50, sometimes 60 pounds a panel, you would be producing or processing about 100,000 tons of materials, which means you're going to be putting about, 65% of that out in new clean glass. You're going to be putting 10 to 15% of that out, in aluminum, and you'll be putting, 10 to 12, 10 to 15% of that in residual materials that we're finding extremely rich in silver.
All right. Well, can you talk a little bit about the plant economics then?
Yeah. So on the larger scale, or even on the demonstration scale, it's actually the same, because the demonstration scale that we've built, it was originally called Project Vega. The demonstration scale facility was designed to do 6 tons a day. That would be about, let's say, 2 tons per shift. We are now moving to a, 24/7, 3-shift operation, and we get about $500 a ton tipping fee paid up front for the panels coming in.
Right.
Our cost, on the smaller scale, even we're looking at about $100 to $150 a ton. And we didn't originally model any revenue because we wanted to be certain that the process was going to put out clean aluminum, clean glass. We weren't sure. We knew how much silver was in each panel, but how effectively was it going to aggregate? How much of it was going to be captured and that we could be certain would be coming out in those final fines, if you will. And so we now have proven in all 3 streams. We are now signing letters of intent and or definitive agreements for those offtakes. We've already shipped glass. We've already shipped aluminum. So we are well into the process, with that facility. And look, I mean, I guess we were hopeful, that maybe 10 or 15% of the overall revenue, in other words, 500 for tipping fees, maybe there'd be another 10, 15, God willing, 20% in offtake. I mean, we think we're going to double those numbers, just based on what we're seeing already, the cleanliness of the material, the spot prices for some of the scrap, the silver values, obviously continuously going up. We're seeing some extraordinary results. So the only other thing, though, is that we've been approached by the market, and it's really a demand pull situation happening here. The market is real time getting their heads around, what do we do with all these end-of-life panels? We've had at least a half a dozen projects already where people ask us to decommission the solar panel. So it could be and I'm giving you real examples, a big box store in Arizona, in Texas, that says, hey, our entire roof is full of these panels. Can you help us decommission? A solar farm or a utility company, smaller scale maybe project, hey, could you decommission these for us? We don't really know how to do that. It wasn't part of our original plan, but we've successfully decommissioned a handful of these things already. The revenue in absolute dollars is higher, for the projects. The margin is lower, but it aggregates to a really beautiful, positive outcome. So we have tipping fees, about 500. We have secondary sales of glass, aluminum, silver, God willing, up to 200. And then we have this decommissioning services, which is still very nascent. It just keeps picking up. So it looks like it could be here to stay and it could be meaningful, but it's probably too early for us to predict it. But long story short, we've always said, look, we're going to have like 85% cash margins on this thing. It's holding true. If not, if anything, it's even a little better.
So what's the biggest difference between the industry scale facility and the demonstration scale facility? And how long would it take to get a industry scale facility up and running at full scale?
Yeah, no, good question. So the demonstration scale, I mean, from an economics perspective, it's very, very similar, except for the speed. So we would say that on a demonstration scale, we have 3 steps in the process. They're currently batched. We can do about 2 tons a shift, 6 tons an hour. Where in the industry scale facility starts processing panels like one every 7 seconds. So that's going to be, that's going to be about 500 tons, an hour. It's pretty remarkable, in terms of the speed at which it can move the panels through. It's contiguous, and we finished the engineering design of that now that we have the results from the demonstration scale facility. And we are submitting the permits hopefully by the end of this month. Typically, the longest lead time for putting up a facility will be the permits. So since we have already leased the facility, since we're already operating on the same campus, really it would be a year. So we've been typically guiding to January 1st of 2026, where we're certain it would be up and running, but it could be a little bit quicker than that, depending on the permits. The equipment lead times are typically 9 to 10 months. So, we would start ordering the equipment once we got initial feedback on the completeness of our permit application, and then we would take it right through to bringing an industry scale facility up and running. The capital for that we've talked about previously, we've said 12 to 15 million. The difference between 12 and 15 million depends on how much we need to put into the land and building. If we're just leasing a facility, like we're doing in Silver Springs, it's going to be probably closer to the 12 million. If it requires us to put up a building or to do something more infrastructural, then it could be a few more $1 million.
Wow. So 500, about 500 panels an hour at industrial scale. Some real quick math says that is a great ROI.
It's an incredible ROI. I'm glad you said 500 panels because I might have mistakenly said
You
500
did.
tons.
That's
500 tons. That was just a slip. But yeah, no, 500 tons. It's remarkable. The speed at which the cash is flowing through the system is remarkable. And that would be true if we were getting paid 30 days after we shipped the reprocessed materials. But we're actually getting paid the tipping fee upfront. Some people refer to negative working capital, but we just think of it as throughput. What is the speed at which the system generates cash? It's also one of the reasons why we already have permitted storage for our industry scale facility at that location. So we are now, because we have a demonstration scale facility, which is commercial, meaning profitable, because the industry scale facility is on the same campus, meaning within the same fenced perimeter, we can start taking larger panels from larger customers. So we're building our market share, we're building our supply chain today synonymously as if we were fully up and running, because we are. We have the process operating and we have the storage available.
Can you also recycle other e-waste in that same stream?
Yeah, ironically, when we launched this business originally in 2021, we were starting with lithium-ion batteries. We were hung up on our inability to remove some of the laminates, plastics, and glues from that process. We had a very nice pilot built. We were producing black mass, but those pesky contaminants, those laminates were getting to us. When Fortunato joined us, he not only solved that problem for us with know-how that he had already perfected and that we applied to this metal recycling, but he also was the one that said we should start with solar panels on the simple basis that there's so much more of them coming out of the market than people were expected, much earlier than they were expecting, and there's no one available to manage them at scale. However, we've never ruled out that once we get that business established and operating, that we couldn't evolve into a broader array of electrification products. And the demand and need for that is going to be very, very high. Not just batteries, like you said, other electrification products, laptops, phones, et cetera. There's the plethora of precious and other critical minerals that are established in those materials that are being thrown away, which is, it's tragic and it's sinful.
So, do you anticipate building other facilities in other areas?
Yeah, good question. So when we looked at the market, solar deployment in the United States is world leading. The United States is one of the, if not the world leader in the rate at which it initially deployed panels. It was one of the earliest. Most of that was in California, and where you would expect those panels to be: California, Arizona, Southern Nevada. And so we see the substantial majority of the deployed panels in the United States concentrated in those three states, and heavily in California, frankly. With California prohibiting panels going into landfills, it created the opportunity for us here in Nevada to take those panels as they're coming east. It's weird to refer to Nevada as east, but they're coming east from California to Nevada, coming east to Arizona. So we're going to deploy at least one more, if not two more facilities lining the border of Nevada, three facilities, to capture the most immediate, largest market of end-of-life panels. However, the demand pull is strong. We are now seeing panels coming out of Texas. We're seeing panels come out of the Carolinas. We're seeing panels in Pennsylvania, New Jersey, even in Ohio. And so we're surprised that the customers are pulling us to take those panels sooner. We're pleasantly surprised. We're thrilled, and willing to ship them right now to Nevada. But ultimately, we're broadening our deployment strategy, maybe quickening it is the better word, as to when we will deploy, when it's appropriate to deploy other facilities, in other parts of the country. It's always been anticipated as our strategy, but we felt that it might have been, 3 or 4 years before the age of those panels got to the inflection point of a material amount of end of life coming out. But we're seeing a lot. So we'll play it by ear. It'll be a quickening. But the biggest part of the U.S. market is California, Arizona, Nevada. But there are pockets across the nation that are now starting to age. You also have weird things. There was a massive hailstorm in Texas a few months ago, and tragically there was, we got hit by 2 hurricanes, in Florida and up the East Coast, just over the last month. So that did some damage, so we're looking at all, and we're connected to all of those conversations.
Yeah, there's a lot of other things that are coming into the industry at the same time, like the increase in efficiency in panels gives especially a larger, like a utility, gives them plenty of reason to replace early. Definitely some that weren't lasting as long as they were supposed to. But you also have the rebate side that doesn't really care if you already have a facility up and going, or if you already have, panels, you can add to it, but people are going to yard those old ones out while somebody's coming in. So
It's true. So we see 3, like, if you could break it into 3 groups, right? End of life, meaning it truly it's spent, right? It's done. It needs to go. Early end of life because of efficiency upgrade. We're seeing that happening in a meaningful scale. And then even coming out of the manufacturers and or acts of God, whatever, breakages, and off-spec materials. So we're actually engaging now with manufacturers of panels who are talking about not just taking off-spec panels or broken panels, but even some of the peripheral materials, which is the same materials, right? That's coming out of their manufacturing process. And so it's remarkable. Yeah, it's quickening.
all right, how do you intend to ensure a consistent supply of photovoltaic panels?
It's really one of the questions that has the least certainty to it, or it's not mature enough yet to have great predictability. So it's an important question. We are engaged in the market everywhere. we're out with utility companies, we're out with the manufacturers, we're out with, engineering services firms that babysit the utilities and manage them. And we're starting to get a handle, excuse me, we're starting to get a handle on, the population of panels, not from a EPA desk study, but from walking the fields, walking the yards, assessing the facilities. And we can start to calculate, how many should be coming out at what time. And so we're starting to build this, call it market intelligence, demand equation analysis. But there's a great variable here, which is we're able to permit our storage in advance, right, of permitting our production. And it acts almost like a buffer, like a shock absorber or a buffer. So because we have a permitted facility, because we're operating and have proven that we can take the end of life to renewed materials, it's a very, very important compliance check for our customers that we can terminate those liabilities safely and environmentally responsibly. So we can prove that box is checked. Okay, can we send you the panels now? Storage, the box is checked. Yes. So now, as we're assessing the market, we're building the market at the same time, taking the order, securing a long-term agreement, bringing the panels in, storing them, and then permitting the production downstream of that. So, if you think about 100,000-ton facility, could you find yourself in a scenario where you've taken orders and even received shipments for 10, 15, 20, 25,000 tons of material before you open up the facility and start processing them full? Yes, that's what we would like to see. Not only did you accumulate 10, 15, 20,000 tons of material, but you started to get some predictability in the flow. You started to get longer term contracts where a contract might say, we're going to send you 3 to 5 trucks a week. It's nascent. I want to highlight that it's nascent. It doesn't exist before. We don't get to go look at 10 years worth of empirical data from a peer or a competitor or something like that. It doesn't exist. But because we can permit an existing facility and operate it, because we can then go forward and permit more storage in and around that or other planned facilities, we're ready to start the business. And because they're paying us up front, we don't have to deploy capital. On the contrary, like that capital comes in to fund then the building of those facilities. Now, we're bringing in capital to accelerate the building of those facilities as well, because we don't see any industry scale competitor that is moving the way that we're moving. So we do not want to lose what we're calling this early adopter or this early market lead that we've established. We want to hold on to it. Doesn't mean there aren't competitors. We just don't see competitors planning to this level of industry scale.
That's really clever. And I had not even thought of the permitted storage as, not only is it money through the door right away, but that's fantastic. And I imagine if you were doing any, if you were seeking funding in a more traditional manner, that would be a really good thing to be able to show. Like we've got the pile of what we're going to process.
It's a key de-risker, right? It's a key de-risker. Obviously, money coming in helps de-risk, but to be able to show that you have the demand. It's not just, yes, we have these panels here ready to process, and they're tied to this contract to get panels from the same source over the next 3 to 5 years. That's what we're building. We're building it across, we wanted to build it across the Southwest region. Surprisingly, we're building it across the country right now.
That's very cool. All right. Just some quick math. Do you happen to know how many tons of panels fit on a truck?
Yeah, typically, again, because it's nascent, you're not necessarily getting absolute and full truckloads. at this point. I think absolute and full truckloads would probably look more like 15 to 20 tons, per truckload. I'm sure we've gotten some truckloads that were 5, 7, 8, 12 tons so far to date, because the projects are still, again, nascent. They're just starting up. We actually toured a monstrosity of a solar farm. Like, I'm not even going to say the numbers because nobody will believe them. And in discussions about getting that kind of contract, they're like, well, can you take some of this, some of the stuff that's just piled up over the last few years, and sometimes that's 7 or 8 or 10 trucks. Sometimes it's half a truck. It just depends where you are and who you're talking to. But about 20 tons 20 would be a full big load. 18 would probably be a full big load.
Okay. Can you touched a little bit on competitors, but if you can talk about the competitive landscape out there for a minute.
Yeah, so there's quite a few people, not quite a few, like less than a handful. There's 3 or 4 people out there that are talking about recycling solar panels. As we investigate them, they're generally good people. Like, as we investigate them, some are very consultative. They're very facilitating in helping companies and helping utilities and helping even residences figure out how to aggregate and manage and get rid of their panels. But they don't have capacity to actually recycle the materials themselves. Others are more intermediate. They have the ability to dismantle. In some cases, we've seen people delaminating by hand or by some kind of automated machine. We don't perceive in those cases that there's a zero landfill solution. We see them recapturing maybe some glass. We see them recapturing some metal. We're not sure where the rest of the stuff is going. In all those cases, though, we don't see anyone that's automated to an industry scale. So in other words, we would be concerned about their ability to scale up, even what they're doing effectively today, right? To the levels of a panel every 7 seconds, 3.3 million panels a year, 500 panels an hour. Like those scenarios, we do not see yet anybody doing it. In fact, we have corroborating evidence directly from some of them, and we have corroborating evidence from the international community. We've been approached in both cases, domestically by some competitors, domestically by some participants in the industry. I'm not sure if they're competitors yet or not. And internationally by companies saying, this problem is rapidly hitting us. We don't have the ability to process at scale. Can we partner with you? Can we license your tech? Can we work with you in some form of joint venture? And those conversations have only perked up, in the last 4 to 6 weeks, but they're perking, So I think it's corroborating. It's also corroborating when someone in Ohio or someone in New Jersey says they're willing to ship panels across the country, that they don't really have an effective alternative, that's more local. Now, that won't last forever. Hence our earlier discussion about thinking about expanding, more broadly, maybe more quickly than we were originally thinking.
All right. I like that answer. I like that answer a lot. So can you tell me what role Comstock Metals plays into Comstock Inc.'s larger decarbonization and circular economy plan?
Absolutely. So when we first came up with the notion that decarbonizing on a systemic scale, across industries, across platforms, was something worthwhile doing, something meaningful, something purposeful that we would commit our enterprise to. It wasn't obvious to us, frankly, even how our mining assets would be decarbonizing. I'll come back to that in a minute. But it was obvious that the bottleneck in a lot of the electrification activities was the minerals. So how do we enable electrification? Is there going to be enough cobalt? Is there going to be enough nickel? Was some of the original conversation. If you looked at some of the EV projections, it would take 80 years of mining, just to meet the 2030 and or 2050 objectives. It was not possible, in other words. that was the first trigger of our thinking. How do we enable decarbonizing activities like electrification? Well, you're going to need minerals to do that. But then you don't want to aggravate the thesis by hard rock mining in a carbon emitting mass scale. And so that led our thinking to renewing. If these materials have already been mined, if they're already in these pieces of equipment, by renewing them efficiently, by renewing them cleanly without polluting, then we would be, by displacement, reducing the carbon footprint. Okay, so that's the basis of the thesis. Now, and it works, right? So just simply by supplementing mining activity with non-mining activities to provide the same materials, we're decarbonizing. And someone would say, well, that's kind of weenie. That's not really meaningful. Well, let me tell you, we've done some math based on the silver contents that we're experiencing today in our recycling process. If we got 3 facilities up and running, and if they were doing 100,000 tons of solar panel recycling per year, the silver that would be coming out of those 300,000 tons of end-of-life panels would make us the second largest or third largest producer of silver in Nevada. Now, if you guys are seeing what's happening across the precious metal spectrum, silver has silver, and primarily because of solar panel production, has shifted the supply and demand equation now such that the demand is higher than the supply. That's new for the last couple of years, for the first time in a very, very long time. More silver is being used in the panels, more panels are being produced, and new batteries are being introduced with higher silver components. So silver is on the decline from a hard rock mining perspective. It's absolutely a critical mineral for electrification, and we're the only one that are doing it at scale in a decarbonizing context. It's a relative calc as compared to fuels, which is a direct reduction of carbon, but it's still a reduction of carbon. So we like that very well. Now, as an aside, we went back to the mining team and said, look, you need to be a much lower carbon footprint, and it needs to be sustainable. How is a finite mining of ore out of the ground sustainable? People will argue it's impossible to sustain that. We said, well, don't think of the business model as just the ore. Think of the business model as the entire ecosystem around that land. So are you going to use cleaner energy to extract those minerals? Are you going to reclaim and restore that landscape? Are you then going to create a new community out of that landscape? Or are you going to leave a liability around that's sore for someone else to deal with? Obviously, we're not doing that. So even in our mining footprint, it has to have a net decarbonizing solution. That net decarbonizing solution may require to expand the business model, may require clean energy to be permanently installed around the mining operation. But that's what we're doing here. So in every way, it has to decarbonize. If it doesn't decarbonize, or if we're just unable to innovate a solution that would be decarbonizing, we'll dispose of the assets, right? We wouldn't continue with them.
All right, you talked about metals and mining, so I'm gonna give you some questions on that side. But I would like to bring up that silver comes out of the ground. What is it, like 8-to-1 compared to gold?
Silver on the Comstock, when we were mining in between 2012 and 2016, we were consistently getting almost 20 ounces of silver for every ounce of gold. And in our Dayton project, it's closer to the numbers that you just said, somewhere between 6 and 10 ounces of silver for every ounce of gold.
Well, I'm going to whine about the price of silver because gold is at like 2,700, maybe hit 2,750. So I think globally it's about 1 to 8 for ounces. So that gives me a value per ounce of about $300 for silver. Clearly, it's never been at parity, and maybe I'm just dreaming here, but with the increased utilization of silver across industry, I have what I feel is a reasonable expectation that the value will increase. And
I'd like to comment, right? So I've been saying for about a decade, people would ask me, Corrado, you ever see gold getting to $2,000 an ounce? And a lot of people will laugh when they hear me say this because I was like, $2,000 an ounce is a joke. I mean, it's just an intermediate step on the way to a much, much higher number. Remember that gold is money, right? And when you have monetary crisis and when you have, let's call it the irresponsible, pervasively irresponsible practices of almost every government, there's no scenario where gold's not going way, way, way higher. That's just full stop. Now, silver and the silver to gold ratio, if silver was just a monetary element, and it is a monetary element, it is the poor cousin to gold in the sense of money. And people still do care about that, and it is still relevant, okay, but less so, right? Although we just heard about some central banks starting to buy silver, which is it's going to undermine what I was just about to say. Silver is money. Gold is really money. Silver is the cousin of money. But silver's industrial use has picked up dramatically. And we were sitting for a very, very long time with the supply of silver being equal to or more than the demand. That has changed. That has changed over the last 24 months. As I just said, you saw what's happened to the price, right? From the low 20s to the low 30s. That is just absolutely the tip of the iceberg, because with the electrification being so pervasively extrapolating around the world, and I'm not just talking about EVs, I'm talking about everything. Samsung just came out with a new battery. If you look at the numbers, we produce about 800, maybe 900 million ounces of gold a year as a mining industry. That number is not going up, right? That number is not going up. We used about 700 to 800 for a long time. Now it's up to 1.2 billion, driven by solar. Now Samsung comes out with a new solid state battery that requires a higher silver content. Someone made the comment that if that battery went mainstream, you would need another 400 to 500 million ounces of silver a year. Silver's going to go up dramatically. If I didn't love gold's profile so well, I would say for sure more than gold. On a percentage basis, it's going up even more. But I don't want to underestimate gold because right, it's a big issue in the monetary scheme of things. So we love the metals. Look, when we did the date and mine plan, we were using a gold equivalent cutoff of like $1,800 an ounce. When we update that mine plan for 2,300, it goes to the hundreds and hundreds of millions of free cash flow. So we love this project. We love the silver that's coming out. Comstock silver for us has a special, connotation. It's pure, of course. It's 3 to 4.9 purity, but it's even more special than that as far as we're concerned.
All right. Well, my last silver question for you. This was sent in to me. Any plans to sell silver at the Comstock store?
So I guess the answer has to be yes, right? In 2014, we were asked by the state if we would use Comstock silver to commission a 150-year state of Nevada. It's called the Sesquicentennial commemorative coin. It was a beautiful coin, 4.9 purity of silver. We only have a few left because they sold like crazy. They're also, when we go to like political or not-for-profit fundraising events, they're always the most exciting auction item, in the scheme of the night. So the answer would be yes. And it's not just because we have an affinity for the Comstock and Comstock silver, because when you mint these things, into coins, you're minting a part of the history, and that part of the history is something that people will tend to care about and they will tend to, pay more for. So we see silver going up. We see a premium for commemoratives. I don't know how big it would be, but it's always been a part of our existence.
All right. Well, I like that answer too, because what I find fascinating, the more I dig into Comstock and every vertical, is initially I didn't understand how the pieces played together, because they don't on the surface look like they're that related. But the more you dig in, you see the interplay and you see the value in each one and how they contribute to each other. So I like that. I wish it was more obvious on the on the surface, if investors had like a 1 minute clip of how this all ties in together,
Yeah,
you couldn't fit it in a minute. So,
yeah, yeah,
all
yeah.
right. Well, uh, I would like to, since we've gone off topic a bit, I would love to know how the SBC talks are progressing.
Oh, yeah, for sure. The talks are very active. We've actually been very active over the last 2.5 weeks. We have a couple of days dedicated, next week. Look, we have to make sure that we're structured right. We have to make sure that we're structured, from an entity perspective in a tax efficient way. There's little details in there that we really prefer not to, get all entwined with, but it's going very well. We're moving forward. It's interesting that, I would attest this more to the maturity of the businesses. Obviously, we just talked about how metals is so finely maturing here. It's still early, but it's really coming together. Fuels is also coming together as well. And those business models, those financial projections, the precise amount of capital that we're, committing here from SBC is enabling a very specific plan for metals, is enabling a very specific plan for fuels. It's really the cause of this is the validation of those models. It's the validation of those financials. And as you might expect, even with the initial announcement of those commitments, that capital is pooling all around the world for these types of clean energy uses, these types of clean energy transition companies. And so we're getting a lot of inquiry around the world for capital, for joint venture, for other forms of funding. So I don't think I've ever been more busy, but I don't think it's luck, nor do I think it's a coincidental thing. It's because once we finally built those models, once we finally had the validating support, I mean, anybody could build a model, but how do you prove that you can get $500 a ton for a tipping fee? How do you prove that someone's willing to pay X for clean aluminum renewed material or clean glass renewed material? How do you prove that you could actually produce 125 gasoline gallon equivalents? You have to put Bioleum into a hydrocracker. You have to hydrocrack the fuel, and a third party has to reconcile and say, oh my goodness, it's 125 gallons. So now that all that is happening, we have capital sources. And our favorite one is SBC, and we're moving forward. Okay, but it's not the only one, right? I feel for the first time in a long time, our future is secure. Exactly how it's going to turn out, as far as I'm concerned, equal to or better than what we've communicated to everyone. And hopefully, we can have clarity in the nearer term. We don't want to overcommit. Once things are done, we will communicate them. But it's going very well. We're committing a lot of productive capacity to getting those over the finish line.
Right, perfect. Well, as an investor, I feel you have been very transparent, but I understand that there is a limit to what you can be talking about, and we don't want to gum up the process. But I do want to ask you something very exciting just happened in the fuels industry, and I'm sure you saw it. But Gevo,
Oh yeah.
they just got a $1.46 billion loan guarantee from the Department of Energy. So my question to you, is that something that you can see possibly happening in Comstock Fuels' future?
Absolutely. So there's a couple of things I want to say to that. First, congratulations to Gevo. Any fuels project that's producing renewable diesel or SAF that's low carbon or near zero carbon, we're big applauders of. Honestly, the reason we tackled this industry is because neither did we see one technology, nor did we see one feedstock that could sufficiently supply even a fraction of the demand that the world is demanding today. Okay, even a fraction of that demand. And so we don't think vegetable oils or vegetables in their own right could do it, full stop. We don't think they should do it. Okay, but that's a different discussion. Waste wood is abundant. It is abundant. What does abundant mean? It means sufficient to supply the demand that's being asked of it, okay? We believe we're the only ones to take our core technology, complement it, extend it, expand it, enhance it to a portfolio of technology. So I don't care if we're talking about core Comstock, Renfuel from Sweden, which is part of core Comstock, EFT, who is enhancing our gas to liquid bolt-on and potentially getting us to 140 or higher GGEs, or the new and recent announcements that we made where we're partnering directly with the National Renewable Energy Lab, the Department of Energy, MIT, such that we're going to bring a whole nother generation to a solution that we already think is sufficient. We already believe that our existing solution will be able to supply all of the SAF demand, meaning there's enough feedstock, the capacity is scalable, and it can meet all the demand. So that's what's coming with fuels. You're going to hear more partnering agreements that enhance. You're going to hear partnering agreements that feed, in other words, feedstock agreements. You're going to hear agreements that offtake with blue chip partners, because we want to make sure our goal is not to control the supply chain. Our goal is to ensure sufficiency of SAF, ensure sufficiency of renewable diesel. To what end? Systemically decarbonizing. So it's really incredible. The Department of Energy, which is now our partner, directly and indirectly, we could be talking about those levels of loan guarantees, but not for one facility. I mean, we're talking dozens and dozens and dozens of facilities. And we're going to partner with whoever it makes sense to partner to deploy them as fast and as much as possible. Someone asked me, well, how many facilities could the market support? And I said, what do you mean? In the United States alone? In the United States alone, with a 16 billion mandate, we could do 120 facilities, 130 facilities. Corrado, is there enough feedstock to do 120, 130 facilities? Yes, there is. When will it end? Never. What do you mean? We mean that there's enough waste wood generated annually, and there's enough ability on short cycle crops, hybrid poplars, bamboos, all these things in the middle to continuously feed the refinery. Oh, that sounds like an oil well that never stops giving. That's exactly what it is. So we're on to something extraordinary here, that it's, and did I mention that 16 billion gallon per year mandate in the US is out of 240 billion that's burned annually in the US? Did I mention that? Did I mention the US is only a part of the rest of the world? This is a global solution. And I think when we signed that agreement with Australia, where we're getting 6% engineering fee, we're getting 6% ongoing royalty, we're getting 20% equity stake in each project, people were like, uh-oh, this isn't even the United States yet, right? This is an outlier. What's going on here? People who are doing the math on that in their heads are right. They're right, And I just want to say the last thing, with NREL, the ability to create, a fully aromatic drop-in SAF, the ability to cut remarkable amounts of capital and operating expense out of an already highly profitable equation, right? The ability to do it in conjunction with the national lab under the purview of the DOE comes back to absolutely, without question, we could finance these facilities over and over and over again, with the support of the government. Because if you get to that scale, it's nationally strategic, it's globally strategic. You're talking about creating a tremendous amount of energy from a clean source. And I say it that way because we need all the energy that we can get. We're not taking market share from anybody. The energy growth that is required is off the scale. And this will be a huge part of the solution.
I I could not agree anymore. I'm a clean tech investor,
Mm,
and I get a lot of comments about, the transition. How are we transitioning? And, are we transitioning to electric? No, we're transitioning to lower carbon intensity across the board and looking at just how clean the fuels you're making are.
yeah, yeah,
It is an answer to so many questions and the scope. So when we start looking at, if you look at the market cap of Comstock and you look at the total addressable market, it is it's absolutely hilarious. I mean, to say, okay, we've got an answer here that can be deployed globally with sourcing. Like, I mean, the amount of woody biomass that just goes to waste it's staggering. And when you start looking at the scope and the scale, then the money to create these plants starts looking so tiny. And I know that the players involved, it
yeah.
is tiny to them.
It is small to them. We would generally say is a big number to start, but we're taking whacks at that number like people are not going to believe with the really truly the globally leading lignocellulosic scientists in the world from Sweden to Colorado. Okay, we have them there on our team. It's our team. We're developing the solution together. We have exclusive rights to those technologies because they're part of our solution. And so it's going to get the facilities are going to get bigger, the capex is going to get smaller, and that doesn't even consider all of the co-location opportunities that we're now being, pummeled with. The pulp and paper mills want to collate. If half of the wood that they're taking in is being burned or thrown away, why wouldn't half of that wood turn into fuel? If sugarcane mills, if half of that, the sugar, the cellulose is being used and the lignin is being thrown away or burned, why wouldn't we turn that into fuel? Like it's such an elegantly beautiful almost mimicking nature, right? This closed loop, right? Why aren't we using these wastes for completely productive? Now you're saying you don't have a land acquisition cost. Now you're saying you have an existing infrastructure in place to plug into. Now you're saying, the permits are incremental, they're not greenfield. Those are quickeners. Those are expedients, right? So it's gonna be crazy. It's gonna be crazy. We're gonna be announcing a lot of times. This is why we need partners, right? We think everything we think about in terms of our system. I liked what you were saying earlier. It's hard to describe it in 1 minute. We showed you a picture, it would be elegant. It's elegant, right? There is a synergy here. There is a core common competency, in what we're delivering to the market. The businesses have a common denominator. They're of global scale, of massive impact, right? And we don't see anybody filling this particular gap in the business the way that we're doing it. So that's what's happening, and we're moving it forward. We're innovating it, we're commercializing it, we're scaling it. So I couldn't be more excited about it. I think, there's still a lot of wood to chop, no pun intended. There's still a lot of obstacles that we clearly see in front of us and we have plans to get over, but it's all there right in front of us. There isn't we don't need a material science breakthrough, to enable either one of these two lines of businesses. They are ready. They are going.
All right. Well, again, I'll just say that as an investor, I'm very excited to be here on what feels very much like the ground floor.
Yeah, it is
So
the ground floor.
I am excited. And yeah, it will. Thank you again for your time. I'm sure everybody else who views this is going to have a better idea of the metal side and also just the current progress that you have going on right now. And it's definitely an exciting time to be a
No,
Comstock investor.
thank you.
So,
We love the interest and we absolutely love the conversation. Thank you.
all right. And again, a reminder to viewers, there's no disclosure disclaimer needed here. I'm an investor, not paid in any way by the company, but super excited to be an investor. So, all right.
Thank
Thank
you.
you.